go beyond market headlines to understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwanese index is down almost 1%, as is the Kospi.
What the Reserve Bank is going to do is it is going to buy $10 billion on March 4th from the market.
The next Nifty support stands at 22,620.
Jeffrey says valuation-wise things are looking up and they do not believe that Tesla will be a big threat. So I'll keep an eye out on this stock in today's trading session.
What do we have? 0.75% lower. So exactly at the support levels, 22,640 or so is where the Nifty is starting at.
Both mid caps and small caps are still at a premium to large cap, as well as their own historical averages.
At this moment, our focus remains on integrating products, synergies and customers across the globe.
Indian markets, in line with global indices, in line with Asian markets, continue to trade in the negative territory.
We see this as a growth opportunity for both of us.
यूएन की एक संस्था ने भारत को सोलर पावर की सुपर पावर कहा था.
When the time is right, we should make sure we make the right investments, build the right small language model.
22,800 was the buzzword over the last 8 to 10 sessions, and now, considering the move today, it shifted to 22,500.
Hello and welcome. Good afternoon. You're with us on Closing Bell. And of course, as always, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. As always, with me is Nigel D'Souza. We're missing Prashant and Rima in action today. They're out busy working. But the market, Nigel has been today, I would say that there's not been any attempt, a meaningful attempt at a, bounce. We started with negative global cues and we've kind of stayed there. So look at that chart. I mean, it's, like in your cricket parlance, it's when even the middle order, the tail enders, try and come and, hit some runs at least. But this is like a team that's almost given up. I hope I'm proven wrong in the last hour.
Well, that's right, Surabhi. But I think the Nifty Bank, that's the one that's come off close on 300 points from the low point of the day. So that's one positive that I'll be looking at. If you pull up the intraday chart of the Nifty Bank, I think that'll tell you a better picture. Yeah, a bit of a recovery out there. The other point is the mood is very, very somber. But, if you look at the number of stocks advancing, there are still 650 stocks that are advancing. At the start of the trading session, there were only 300 stocks that are advancing. So that is one positive. And, just to cite an example, there are opportunities out there. Case in point being Varun Beverages. The stock was down 25% in this year itself. That's, in the last 2 months or so. But in today's trading session, it's currently at the high point of the day. It's up close to around 5%. So, stocks that have seen some kind of selling pressure and maybe business not too bad, valuations coming to some levels, just, spotting this as an example. And we saw this all of last week as well. Stocks that have lost 15-20% or thereabouts, they're gradually seeing some kind of buying out there. And this is one of the stocks, in today's trading session. Mahindra & Mahindra is the other one. A lot of brokerages talking about maybe the threat or the fear that was there last week may not entirely hold through. So for the time being, in a weak market, that's still holding with a gain of around 1.5%.
No, absolutely. And since you started with the optimistic side of the screen, let me stick to that and add one or two other names that really stand out because of the way they've kind of been, braving the fall. Varun Beverages is one. Look at Pharma. A lot of mid-cap tier 2 pharma stocks are having a pretty decent session today. There's very clear buying in that perceived safety zone. GSK Pharma, Loris, Pfizer, Newland Laboratories, all these stocks are managing to see some traction on the buy side between 2% to 3-4% in some cases. The stocks are on your screen. And the other ones would be where there's some kind of maybe a news flow or impetus. For instance, 361 Wealth Management, it's getting added in the FTSE indices. So there's some excitement there because of the possible passive flows that will start coming in once those adjustments happen. So just some examples of stocks that are moving higher in the broader market. But having said that, let's quickly do a top-down analysis of the Nifty as well. On the Nifty today, the problem is that nothing really has worked. IT is still down and down quite a bit, though we've been getting all these headlines from NASSCOM, and we'll play out some of those sound bites as well. But look at Wipro, HCL Tech, Infosys, TCS, all your large cap IT is exerting tremendous amount of downside pressure. You have other Nifty heavyweights, the banks obviously, the bank Nifty is falling less than the Nifty, like Nigel pointed out, but it's still down. Names like ICICI Bank, Reliance, L&T, or big boys are simply not helping, matters on the upside. There's a bit of buying in consumer. The only space of green in the Nifty as well as pharma and consumer. So Reddy's, there is something like ITC, Nestle, there's some buying over there. And of course, Mahindra & Mahindra is seeing some recovery after a huge drubbing over the last 7-8 trading sessions.
Well, that's right. And the Nifty Bank is showing signs that maybe, in fact, there is some bottom fishing going on out there. And even Kotak Mahindra Bank, after the news that we saw last week, which was quite positive, that stock hasn't done much, actually. But, for the time being, that's trying to fight back one of the stocks that is at the high point of the day. So let's see whether or not it's a weak trading session. No two ways about it. The structure itself is punctured. Select opportunities are there in the broader markets. But let's see if the bulls have some kind of a fight in the final 60 minutes or so. We have Nagraj Sethi, who joins us to help us out with his trade on closing bell. Hi, Nagraj. Good afternoon. Good to see you in. What is your take? I mean, it appears the screen is looking quite weak. There are calls for lower levels. The mood is quite somber as well. At around 22,550, what's your take, given that we have expiry as well in the next 2 trading sessions?
Good afternoon, Nigel. Nifty has been in a strong downtrend, no doubt about that. Recently, we have seen some consolidation movement, an attempt of upside bounce. Market is has sold off at the little higher levels, and market is in a clearly one-way down. So I think still market is not out of woods. More weakness is likely to come. There is a minor support of around 22,400 odd levels, which is a 20-month EMA on a long-term chart basis. But still, I'm not expecting this support to hold as usual, and more weakness is likely below the support. Chart pattern is looking weak, even though you mentioned about the Bank Nifty. Bank Nifty has bounced back slightly from the lower levels, but I'm little suspecting the upside bounces. We have seen previously also that these are upside bounces are creating shorts at the higher levels, and eventually the indices are coming down. So more weakness is likely to come down in Bank Nifty as well.
Okay. Apart from banks, Nagraj, any other individual trades, stocks, mid caps, large caps, anything that you'd do in the last hour?
Yeah, I have 2 stock calls. One is from long and one is from short side. The long is Laurus Lab, as you mentioned a while ago. Laurus Lab has declined a bit from 640 to 520, 518 levels and bounced back in today's session. The overall chart pattern is looking slightly positive at the lower levels. It is indicating the bottom reversal is taking place. Placed at 200-day EMA, currently trading around 540. One may look to buy at this point of time. Immediate target would be around 570, and one can place a stop loss at 520. Second one is on a short side. If you look at the Grasim has been in a range bound action, showing some rounding bottom, rounding top type of pattern around 200-day EMA. The overall chart pattern is looking weak. Lower tops and bottoms is indicating that more weakness is likely in the near term. Currently placed around 239092 levels. One can look for selling the stocks, and 2250 is going to be the target on the downside, and 2480 is going to be the stop loss for this stock.
Okay, all right, Nagraj, thanks a lot for that. Well, as we speak, some bit of a attempt to claw back is what we are seeing. And from the broader market, just want to highlight a couple of stocks that have pulled back. Data patterns, that's now at the high point of the day. The stock has lost, I think, close to around 30% just in the last 2 months or so. But as we speak, at the day's high. And car trade is the other one that's up 4.5%. Volume spike on that one as well. So both of them have come onto my chart. But a whole host of brokerage firms, they're positive on Mahindra & Mahindra post the sharp correction we've seen the last few days. Nimesh joins us to tell us what brokerages like Goldman Sachs, Bernstein, as well as Jefferies have to say on M&M. Nimesh?
The stock is on 14% in the last 10 days, has massively underperformed the Nifty and the auto peers as well. And on Friday, there was massive delivery-based selling and some fresh shorting as well. There are 2 major concerns the street is highlighting. One, the Tesla entry, and 2, a lot of analysts said that the EV bookings was lower than their estimates of 30,000 units. So these were the 2 major concerns. But there are multiple brokerages have written on M&M today. I'll start with Goldman Sachs first. They have a buy rating target price of 3,800. They believe that Tesla's potential entry is driving 15% discount to M&M's auto business versus the peers. And they've put out very interestingly that in the last 10 years, M&M has returned a medium of 23% and 36% returns over 12 months and 24 months after the 15% kind of falls from the recent peaks. And there's been 5 such instances. So now they believe that can replicate again in M&M. So that's Goldman Sachs' view. Bernstein has put out a note as well. They believe that the current correction is a buying opportunity on dips, and they feel that the valuations are now quite appealing from an investment point of view. M&M has adhered to its capital allocation policy, which is good. And Tesla's entry could be having a very long-term impact, not very in the near term. That's Bernstein's view. Even Jefferies has put out a note. They have a buy rating, target price of 4,075, the highest probably on the street. And they believe that the valuations at 20 times core business on FY27 is quite attractive, and hence they retain a buy on M&M.
Okay, thanks a lot for that, Nimesh. Deepan Mehta, Director at Elixir Equities, joins us on the show. Deepan, you're looking to buy good quality stocks that are pulled back and are available at fairly okay valuations. What do you think about Mahindra & Mahindra? Some of those brokerages, they are pointing out that they don't believe it was such a big threat with regard to Tesla coming in for a whole host of factors, with regard to the manufacturing mix, with regard to the government incentives that are on stream, with regard to pricing as well. And some of them say that the start actually with regard to EV sales wasn't so bad. After the stock corrects 15%, you're interested or not?
Yeah, good afternoon, Nigel, and thank you for having me on your show. First, a disclosure, we and our clients are invested in Mahindra & Mahindra and still believe in the story and are quite confident that the management will be able to take on such challenges, not just from Tesla, but even increased imports from BYD, maybe a few other Chinese players as well. And I think the reason for that is the kind of investment which they have made in their own EV lineup. I think the new products are exceptionally good and they got a phenomenal response. So I'm pretty confident that M&M will be able to maintain its market share. Apart from that, their farm equipment business also has been a stable business. It's been a good profit center. Its operating profit margins are also higher. Another dominant market position over there. So that's going to also drive growth over the 3 to 5 year type of a period. Valuations are reasonable. And if you were to look at buying into a single auto company, which is into four-wheelers, passenger vehicles, I would go with M&M over Maruti as well, just because of their positioning in the UV segment and also their lineup for EVs.
Okay. All right. Deepan, stay on. We have lots of questions for you. Plenty of stocks to track. Moving on now to, another set of stocks that are quite interesting this afternoon. We're looking at, in particular, do we have? No, we don't have Manglam. I thought we have Manglam already because we will be talking about Scotch whiskey a little early in the week to be talking about it. But he's been picking up some buzz, which is out there in the market as well, that maybe this whole FTA business between the India and the UK, those talks could start soon. So will the import of Scotch whiskey get a little cheaper for India? And if that happens, then what does it mean for United Spirits? Actually, before we get in, Manglam, Deepan, since I'm already on the subject of Alcobev stocks, they say, Alcobev is something you consume in all seasons. When you're happy, when you're sad, when the market is up, when the market is down. Lots has been happening on the beer side.
Deepan, you speak for yourself. Somebody is directing it to you.
I'm just generally saying that's the perception, right? So given that it seems to be an all-season product, what about the listed stocks? Anything looking interesting after the correction?
Yeah, I think that, when we look at the entire consumption space and the way these celebrations, wedding celebrations, festive celebrations are going from higher and higher budgets over the years, I think Alcobev industry certainly has got a pretty decent future. It's just that there are far too many restrictions, especially at the state government level, which make the earnings quite volatile. Our preference is to go for the smaller Indian players. The best pick with usual disclosures is Allied Blenders. I think that's a company which has come out with a very good set of numbers. They are a quality player and pretty large size as well. Apart from that, Radico also, I think, has been going sideways for a long time. And their new products have also been very well received. Stock is a little expensive, but by far the best performer within the Alcobev sector. And there are dark horses like Tilak Nagar and Som distilleries, I think, which can also do very well. I usually don't prefer United Breweries and United Spirits because their track record last few quarters have not been that impressive. And they're not able to manage the regulatory challenges as well as some other regional players who are still able to get double-digit type of volume growth. And if you want to play the consumption story, you want to play the FMCG story, then I think Alcobev is a better way to play than maybe HUL, Nestle, or some of the traditional FMCG players.
Yeah, and these stocks, I was looking at how much they've lost from the peak. So contrary to stocks that are down 40-50%, that had obviously a much bigger rally, like the CapEx and the PSUs, these stocks are down about 20-25%, roughly speaking, from the peak. But then, yes, the rally has been nothing comparable. I think we've got actually Manglam now joining in. So Manglam, first you told us that American bourbon whiskey is getting cheaper. Now, could it be Scotch getting cheaper?
It could be Scotch getting cheaper, and that time itself I had said that, you know, the bigger trigger for United Spirits and the ones that import and sell Scotch in India would be the UK FTA deal, UK-India Free Trade Agreement deal, that is, because the conversations are on up until May 2024. Thereafter they hit a bit of a pause, largely because we had the central elections in India and also the elections in United Kingdom itself. Now we understand that the talks have begun once again, and one of the pointers of that talk is a reduction in duty on imported Scotch itself. And on this itself, we had spoken to Hina Nagarajan, the MD of United Spirits, and she said that, you know, if the reduction of the duty, remember there are two kinds of taxes on alcohol, one is central, the other is state. So if there is reduction on duty in imported Scotch from the centre and it is not offset by any increase at the state level, then the impact of this could be anywhere between 500 to 1500 basis points. Now that could either mean the prices of liquor would come down by 5 to 15% at an MRP level for consumers. That's volume positive. If not, then that would flow straight to the gross margins of all these companies. But again, these talks have begun. We need them fructified, and we need nitty-gritties of how much has the duty been reduced, if at all it has been reduced, and whether the states have let that pass on to consumers by not increasing it, increasing what has been reduced at the center level itself. So those are multiple moving parts, but the fact that talks have begun has kept the stock afloat and excited in today's trading session.
Okay. Some stocks that are managing a high. Sorry, I had to take that. That was a very obvious one, but I had to take it. Nigel.
Well, yeah, Mangala man, welcome back. I mean, what a lucky guy you are to watch India versus Pakistan. Fabulous, and I'll excuse you this time that you didn't stop at the duty free for me because you had to get to work and address the real business.
Because duties are getting cheaper, no? Now that he's saying that it will be by cheap here.
If the UK FTA does go through, I may not have to stop at duty free for you anyway, because your triple in the city would be lower by 5 to 15%.
Manglam, you know me for 10 years. Duties or no duties, it doesn't matter. But tell a quick word on the game. How was the atmosphere out there?
The atmosphere is incredible, Nigel. One of the most impulsive decisions I've made in my life was there for just 12 hours, airport, stadium, airport, back here. Tired but incredible. Like I said, fatigue fades, but memories will always remain.
That's what I tell you, and at that stage of life, the little one is still small. In the years to come, it may not be possible. So good on you, mate. Thanks a lot for joining in and filling us in with all of those details, as well as on the drinks, as well as on the match. Well, so we got another question for Deepan.
Yes, let's move on and talk about some other sort of pockets of the market that have been quite active. Deepan, this whole pharma move that's been building, it was there last week as well, and it's there this week as well. So we've spoken about the daru. Now let's talk about the dava. Within pharma, I mean, is there anything that you particularly like? Some of the tier 2 pharma names like GSK Pharma, etc., even Laurus, they're all doing well today. Any picks?
So I think that we are very positive on the pharma sector, and last few quarters have been pretty decent. And some of the competitive pressure in the US generic market also seem to have subsided, and regulatory compliance also has improved. But this whole Trump factor, of imposing customs duty on pharma, that's become a bit of a cloud on the pharma industry. As you know, the US generics business, that divisions are the most profitable for the pharma companies, and any tinkering with the customs duty over there can have a very, I would say, major effect on the financials of these companies. So I just want to have the air cleared about this customs duty or tariffs on pharma before you look at the sector in positive light. For the time being, I think it's best to remain invested. But if you still want to buy and increase exposure to pharma, I would go for domestic focused companies. And the one which really comes to mind is Mankind Pharma. They run a massive acquisition. Typically, Indian acquisitions have always worked out within the pharma industry. And I'm pretty confident that Mankind may also turn this maybe earnings accretive pretty much soon. And I'm just waiting for the right valuation point for getting an entry into Mankind. Having said that, it's a company which is on our watch list, and we may be investing at any point of time.
Okay, all right. Deepan, I just wanted to ask you on Bharti Airtel as well. The stock is under some pressure in today's trading session. It's down close to 2%. I'm looking at the BSE announcements, and one of them is that the board is looking to increase its shareholding in Airtel Africa by close to around 5%. And as of the last, updated number that I have, the stake that they have out there is close to around 57%. So, the payout could approximately be around $300 million. Would you buy into this weakness? And if that's the reason that the stock is under some pressure, it's down 2.5% in today's trading session. So I think the street will be worried. You're already at 57%. You're looking to increase it by another 5% or thereabouts. It would mean a cash outgo of around $300 million approximately. Your take?
Nigel, first of all, I think the heavy capex which Bharti Airtel did is now more or less over. That's what the management has said. So their entire 5G coverage and all the capex related spends to that are more or less over and done with. So maybe as a capital allocation policy, they want to now increase their stake in Airtel Africa. But that business also has done very well. There are a few smaller divisions over there which are highly profitable. They can be spun off as well and value can be accrued over there. At the same time, I think this is a company which has got a steady performance. ARPUs are steadily increasing. And my sense is that, when you're looking for businesses where there is secular growth, where you can be sure of 15-20% type of growth rates, Bharti Airtel certainly fits that criteria. So I think at corrections, we are positive on Bharti Airtel. And as I said, I think the cash flows per se will increase within the company because of lower capex. And more or less, I think they should be able to manage their balance sheet pretty well. So positive on Bharti Airtel, again, a company in which we are not clients are investing.
Okay, all right. Deepan, appreciate you joining in and giving us your take on a lot of those stocks that we just discussed. And as we had the discussion with Deepan, the markets have come off a little bit from the lows of the day. And the reason is actually the Nifty bank that's pulled back closer on 320 points from the low point of the day. It's down 0.6%, but there is a pullback out there. Stocks like Infosys, which are larger weights, well, they have cut their losses. So Infosys is still down 2.5%. But it's recovered close to under 1% from the low point of the day. Kotak Mahindra Bank continues to fight for the bulls. And Axis Bank is the other one that was in the red at the start of this hour. That's moved into the green as we speak. Time to slip into a short break. On the other side, we'll get an interesting chat going with Mr. Pashupati Advani, the founder and chairman at Global Foray on the other side. Stay with us.
Welcome back. So the news from the street is that it's not really moving or changing too much. 1% still down as far as the Nifty is concerned. Midcap index is now trying to stage a bit of a pullback because there is some bargain hunting that's going on. So the Nifty is ambling along the same zone. But look at the midcap index, slightly off, where we were about an hour ago. Let's now put the spotlight on the IT space because we've got lots of headlines from the NASSCOM summit. With the advent of AI, the biggest question that the Indian IT industry faces is perhaps, is it time for existing business models to also consider some of the newer, aspects like large language models or small language models? Well, our colleague Shireen posed this question to Infosys CEO Salil Parekh, who was at that NASSCOM Technology and Leadership Forum 2025. Let's listen in to what he had to say.
The view that we see is there's a huge shift in technology. So whether you look at generative AI or you look at quantum, or there are several other technologies in motion today which will impact where the world goes. What I mean by a view of the future that we are seeing is when there's huge technology change, we within Infosys, I think we broadly within the Indian IT sector are ready to face that challenge. And it's actually exciting because you look at some of the new work that's going on, whether it's from startups through large businesses, it's all coming from India.
Do you believe with what CVK just said that the time is up on the current business model?
No, what I feel is what CVK is saying is really a call for us to make sure we don't remain complacent. There are aspects of what we are doing today that are growing well. That will continue, but we need to find new ways. So if you look at AI, there's a massive productivity benefit we are seeing. For example, in software development, between 7% and 15%. That's a huge number. And we use that in our Finacle product as an example. But we're also seeing new work. There are new work in credit analysis we're doing with a client, which we would never have done had it not been for generative AI.
What happens to the people part of this business now? Let's talk about that. What happens to entry-level jobs, for instance? What are we talking about in the next 5 years?
So there, first, in the existing employees that we have, there's huge reskilling. So there's a constant move, especially with generative AI, but all through when we were having digital or cloud or cyber, a lot of reskilling today, at least within Infosys, over 270,000 people more ready for AI. So that's the first element. Second, in terms of new roles, we've already shared this last quarter. For the next financial year, starting April, we will recruit something like 15 to 20,000 new campus hires.
And Rima Tandurkar spoke to the MD and CEO of L&T Tech Services, Mr. Amit Chanda, at the sidelines of the NASSCOM Technology and Leadership Forum. Let's listen in to excerpts of that particular conversation.
So let me step back and say that the L&T group as well as the board has got some very lofty ambitions for our company, and so do we. And the ambition is to get to about $3 billion in the medium term and then build a platform to get to $5 billion. So that's broadly the thinking, if I may, or what we're going for. We continue to look at acquisitions. So, see, we did Smart World, which was 100 million revenue. Intelli is 100 million revenue. So we are continue to look at automotive in Europe. When the time is right and the pricing is right, we continue to look for medtech in the US, and we actually starting to look for a plant engineering company if we can in the US as well, because we believe that plant engineering, which is one of our verticals, that actually will grow 25% year on year this year, and showing similar growth trajectory next year, has a huge kind of upside that we can get to. I do believe that CY25 and FY26 will be a better year than organically than FY24, yes. 5 and CY24.
All right, that's L&T Tech talking about their growth plans, which could also include more acquisitions. Markets in its own mood today. Stocks still down 4.5%. Well, let's welcome in our next guest on the show now, Pashupati Advani, founder and chairman of Global Forays with us. Pashupati, pleasure having you on. Thank you so much for joining in. So the market has caught a cold and it's not going away. This viral flu, it's been on for a while now. What do you think? I mean, are we anywhere? I know this is like one of those redundant, retarded sort of questions, but I'll ask it anyway. Do you think we're close to the bottom?
It's just like you put fuel on on the fire, and the fire keeps growing bigger and bigger, and it doesn't look like it's going to stop. But it's a slow death. That's the sad part. It's not. They haven't just hit you over the head. It's like going down slowly. And one of the other challenges is, which is the wild card, which is the second man in the Oval Office, which is Mr. Elon Musk, who's got his own agenda. And one of the reasons why I can see a Bharti getting hit is because he thinks he's going to try and get Starlink into India, and that's going to cause disruption in the whole telecom space. It's also bad for Vodafone. It's also bad for Reliance, but mainly Bharti is the pure telecom play. So I think that's what's hitting it. The second thing is that if you've got these things of not wanting to give jobs to non-Americans, so that's also going to throttle the IT companies that we've got. So that's a sector I've actually not been very bullish on, simply because I felt that that is going to happen. And also you've got AI. You just mentioned it. You had Salil Parekh also talking about it, that he's trying to pivot, but it's not so easy. And machines are replacing. I mean, my son works in AGI. He's getting machines to do the programming of this thing. So that's the challenge. So, are we able to, stand up to it? I don't know. Though they do say that Indians have all the IT people, but those IT people are sitting in America, not in India. So I don't know how it's going to work, but we'll see.
Shireen put that question also to both HCL Tech's CVK as well as Salil, and exactly asking that what happens with all this protectionism. And their reply was that they have increased their nearshoring. I mean, they're stating the obvious. They've had to do it, kind of increasing the headcount out there and making sure that they have enough feet on the street out in those markets, and that'll have a cost implication always. So we'll get to that. So IT is not really something that's finding your fancy. But what else have you been doing? Have you been buying anything where you're finding better valuations?
One is obviously looking for bargains. There's a couple of reports out there that are looking at, smart guys looking at bottom fishing and choosing, I would say, off the wall obscure stocks. Fortunately, I've been a bit of a gold bug, so I've done okay in that space, and I actually increased my exposure about a year ago. So I'm happy about that. But the gold price going up has actually not resulted in the jewelry people going up. If you were in jewelry stocks in India, you've not really done that well. But I don't know. It's you have to kind of hit your spots and say, okay, what is going to do well in India? I'm, like a broken record. I say government is going to continue to spend. Government is going to continue to do infrastructure. Government is going to continue to do defense. Though I think the defense model is going to change. We're going to have to buy directly from the US rather than getting them to manufacture here. So, so this protectionism is going to hurt us. And we're also going to be buying American oil, which is more expensive than Russian oil. So that's going to have some effect and create inflation. So it doesn't look so good for the markets. And I think that's something that we have to accept. And where do you get out? It's very difficult to say, you've got good stocks and you want to hold them, but you're going back to basics, which is high dividend yielding stocks, maybe PSUs, maybe companies that benefit from the government spending. Those are the companies that you need to be in. And I think, that's where we're at.
Hi, Mr. Advani. Good afternoon. Good to see you. And besides the threat for the telecom companies, the other factors that Bharti Airtel, late on Friday evening, they put up on the exchanges that they're looking to increase their stake in Airtel Africa by 5%, which means $320 billion goes out, which the street is saying it's okay, but will that put any risk on their dividend payouts? That's something that's a bit of a question mark. I guess that's causing some nervousness as well. But Mr. Advani, give us a couple of stocks. In the past, we have spoken about some infra names that you've liked, some of the new age companies in the past, you've spoken about those names as well, like a Paytm. Give us a couple of names. The markets have come off, but there are individual stocks that have come to good levels. So if you could name two of them for us.
So I'll tell you one thing. Somebody sent me a list of the worst performing 1,000 stocks. Okay. And there are some good names in that. They're off 40 and 50%. Things like maybe a stock like REC and Power Finance Company. Again, you're looking at stocks like that. Okay, it's off again today, but I think the pharma stocks are also okay. They're cleaning up their act. They are the generic, host to the world. I think that those are also worth buying and nibbling at. And I think if now's the time to look at good stocks. I am not I'm actually bearish on banks, and I'm also bearish on IT. So that means that's more than half the index if you take both those sectors. If you take PSU banks, private banks, IT, you're at pretty much 40+%, maybe even 50% of the indices. So that's what's pulling it down, and that's what's dragging. And I think that's they're trading at high PEs, and people are just selling them to because they have nothing better to do.
So what you're saying, Pashupati, is that the old themes, maybe they'll still keep running, which is capex and infrastructure, maybe not as hard, and you'd look for high dividend yield plays. Any more examples of that?
Those tend to be PSUs. Those tend to be PSUs because, again, the government is investing. They also want to get high dividends. So that tends to be, the oil companies, the oil marketing companies, they're the ones that are paying out decent dividends. REC is another one that pays good dividends. And of course, people are going to be shifting towards things that look like fixed income. So then, even REITs will be okay, generally, as a sector. Because they're overvalued in terms of the amount of property in them, and they've got rent, so they're paying good dividends. So I think those are the places to be.
So conservative is the approach, Pashupati. Hearing you're looking at REITs, you're looking at quasi-debt plays, you're looking at dividend plays. What about this whole, thought of a recovery? I mean, we tend to, it's human nature, either we're too optimistic or too negative. But maybe the truth lies somewhere in between, you think? Is there still that hope of that recovery? Rural is doing well. Nigel's been pointing out a couple of data points as well on, electricity demand as well, toll collections. It's not too bad, the ground level data. So would you at all look to play any sort of recovery in consumer or anything else?
So obviously, electrical power, we're in great shortage. So everybody who's into electrical power will do well. That obviously means Adani is at the top of the pack. There's Tata Power also, which is doing well. Then anything, transformers, equipment for wires, because that infrastructure is under solid pressure and we need to increase. So I think those are definitely the sectors that have to do okay. And the government is going to continue to spend in those sectors and continue to make sure that those bills get paid, and so that the growth story in India continues. And we have a huge domestic market, so we do need it. And we're coming into summer, so it'll be interesting to see how the power producers and the states actually manage and make sure that we have power through the summer, because I think it's going to be a hot summer as well.
Okay, a hot summer, slightly cold market, but that's what we have right now. Thanks, Pashupati, very much for joining in and giving us some sense of how one can perhaps navigate this.
It's very tough to do, Surabhi, in a market that looks like it's falling on its own blades. But it is. We have to live with it, and we enjoy it. And unfortunately, we have to mark our portfolios down on a daily, weekly, monthly basis. So we cry and keep going.
But at least Pashupati has some gold, right? He's well hedged, and you're looking to hold on to the books of profits there.
I wish I had more. But I have some. I did shift some earlier in the year.
I missed the sovereign gold bonds, Pashupati. I chipped in every year, and unfortunately it stopped. So missing out on that one. But thanks a lot, Mr. Advani, for joining in and giving us your take on how do you see markets pan out from here on. By the way, the little wee bit of a pullback that we saw, that's got sold into yet again. Power Grid has moved to the low point of the day. Bajaj Finserv as well has seen some bit of selling pressure. And NTPC as well has come in for some profit taking. As we have been mentioning, the sole good point is that, in fact, the number of stocks advancing are still around 660 or thereabouts. By the way, so a couple of these mid-cap names are doing well. Happiest Minds, the stock has seen, I think, some correction from the recent peak. Now it's up 7.5%. So if you look and see, there are stocks that are doing well. Varun Beverages, Happiest Minds, these stocks are up and they're going up on very, very large volumes. Now Happiest Minds at 7%. The high point of the day.
Absolutely. Big mover there. That is Happiest Minds. We'll take a quick break on that note, come back on the other side, and we will, of course, get you some more trading calls and, the latest on a couple of other stocks and companies.
Welcome back. Well, a few stocks in the broader markets. Need to keep highlighting this because, there are stocks that are moving and there are some positive reactions as well. Metropolis, we had the management join us earlier today. They said that business is shaping up pretty okay. They're looking at some inorganic growth, and some of the inorganic growth that they've done in the past year will help them in terms of growth in the coming year as well. And acquisitions they're looking at is in North India. So that's one stock that's now moved to the high point of the day. One Source Specialty, that's another stock that was trading in the red. That's suddenly gone spike up for them. So good move is what we're seeing on that one. One Source Specialty should come up for you on the screen. You have Texmaco Infra. That's another stock that's moving well as we speak. So good up move is what we're seeing. So the headline index is down. Breadth of the market is negative. But a few stocks doing a gig of their own. Nagraj Sethi is back with us. Nagraj, what are the calls you have for us?
Yeah, market still not showing any signs of a strong upside recovery. Showing consolidation at the lower levels. I'm expecting more weakness from here onwards, at least towards the immediate support of around 22,400 odd levels. And yes, rightly said, there are some sectors are buzzing. There are some stocks they are coming up from the lower levels. There is the one stock that from the PSU basket, PSU banking is the Union one, Union Bank. Union Bank has been in a consolidation a little while ago, previous few weeks, and recently showed some bounce back from the lower levels from the higher bottom. Currently placed around 117, 118 levels. I'm expecting this upside momentum to continue at least for the short term, not for a long term. And next hurdles to be watched is around 122 levels for the stock in the near term.
Okay, Union Bank, and the other one is?
Yeah, I have other one, same the stock that we discussed, the Laurus Lab on the upper side. The same, I'm sticking with the same target and stop loss on the upper side for the short term trade.
Laurus Labs as well as Union Bank. Thanks a lot, Nagraj, for that. By the way, in the IT pack, Coforge is a stock that's actually bucking the trend. That's been strong all through the trading session. It's currently holding with a gain of around 2%. While you have Midcap IT, actually, that's seeing a lot of selling pressure. So Coforge comes up for you on the screen. The stock up close to around 2%. Well, let's move on then. The recent definitive agreement signed by global investment firm KKR with CVC to become the largest shareholder of Healthcare Global is generating significant buzz in the Indian pharmaceutical sector. This development underscores the ongoing trend of private equity and venture capital firms making big bets on India's healthcare industry. Vinny is with us to tell us what's attracting PE firms to the Indian healthcare industry. Vinny, take it away.
Private equity and venture capital firms are betting big on the India's healthcare sector. PE and VC deals in 2024 have surged 84 transactions from last year's just 62 transactions in 2023, which is signaling a growing investor confidence in the healthcare sector. However, the deal value, that has seen a bit of a shift coming in. Investments in hospitals and clinics have fallen sharply from $4.6 billion in 2023 to just $1.2 billion in 2024. Also, what we're seeing as a shift coming in terms of funding, whereas it moved medical equipment, if you see that has seen a five-fold jump in terms of the amount that has been invested for this sector by PEs and VCs is a sharp jump there. Reflecting that, everyone wants to focus a bit more in terms of the growing focus on technology and innovation, specifically in the healthcare sector. Now, move on and talk about global investors who are eyeing this sector. There are big names that have come in. We have KKR, Blackstone, TPG, among some of these names where you're seeing the deals specifically happen in the last 2 years. KKR's Healthcare Global obviously made an announcement just yesterday, 2025. We had TPG's Manipal Hospital acquisition that came in 2023 as well. And Aster DM and Quality Care's merger in 2024 was a big one that we were watching out for. KK's Baby Memorial Hospital was an important one as well. Now, obviously, there are other deals and mergers that took place as well. And specifically an increase that we saw coming in 2022 and onwards till 2025, we saw an increase coming in, and post-COVID, this is something that led to an increase in terms of investments from PE and VC in the healthcare sector. M&A activity is also heating up as the DM acquired Care Hospitals, Max Healthcare took over JP Hospitals, as well as Fortis acquired Shriman Super Speciality Hospitals in the recent times. PE, when you look at it, there were a lot of exits that happened as well. Not only entries, there were exits that were there and which were big and notable. Now, Blackstone and TPG, there were important exits that happened on that front as well, especially in Aster DM's deal that happened, the Quality Care deal that happened, we saw a bit of entry and exits on that front. Overall, this is marking a 1.6 billion strategic exit that we saw happening in 2024. Now, moving on, Chris Capital as well as Apex Partners also made secondary exits in 2024. And in total, secondary exits for 2024 was valued at around $669 million. Now, what is driving the surge in investments in the Indian healthcare sector from PE and VCs? One, the sector remains quite underserved with only 1.6 hospital beds per 1,000 people, which is far below the global benchmark that we have. Healthcare spending, that is also just at 3.3% of the GDP. Compared to in US, it's at around 16.5%. In China, it's at 5.4%. So post-COVID awareness, that has also picked up pace. Insurance penetration is increasing and medical tourism also is picking up fuel. And that will what is leading to the growth for the sector. And those are strong tailwinds, which is something that is attracting PE and VC investments in the country in the healthcare sector.
Okay, all right. Thanks a lot for that. Vinny Anand Tandon joins us to help us out with some analysis. Anand, good afternoon. Good to see you, Ben. Could you tell us your view on HCG? I recall when CVC came in, HCG had a lot of debt on their books and, things were looking quite bleak. From there, they managed to turn it around because the company became debt-free. Dr. Ajay Kumar as well, he had a vision for the company. And the stock from the recent lows, well, it's done quite well. Valuations were in favor. Now you have a new owner. What do you do?
Well, hospitals in general is a good place to be because there is consolidation going on in the industry. From a consumer point of view, from a company point of view, obviously it is quite good because you have deep pockets, you have money coming through. The outcome, however, for the industry as a whole and for consumers in general will be bleak. At the end of the day, if you look at what the PE investors have done in the US, they have stripped all the assets in a way that have made it extremely expensive for users to use, and the quality of care has fallen dramatically. I would therefore prefer, if you're really looking at companies to sustain, to have owner-driven companies rather than, PE-driven companies, because where there is an owner, there is a chance, there is a conscience. Whereas if you have a PE, the only thing that matters is how to extract the most out of each bed, and each bed is a number, it is not a person. So overall, from a perspective for that particular company, you're likely to see better numbers going forward. From a consumer point of view and an overall trend in terms of healthcare, it is not a very encouraging trade.
Okay, all right, Anand, stay on. We'll have some more questions for you in just a bit, but we do have to take a very, very quick break. And as we slip into this break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing the CNBC-TV18 all-new app. You can get instant access to breaking news, in-depth articles and analysis, all the financial world updates at your fingertips. Download this app from either the Apple Store or from Google Play, or you can even scan the QR code on your screen.
Hello, how are you? Good. I know you were doing CNBC for like 30 years. CNBC is only 25. So I...
Banking aspirations.
So I would say never to anything.
So I think it's an amazing time to work in India. If I were a founder who is starting up today, I would want to start in, India. It's an amazing
In fintech?
place. In fintech. Who breaks the silent only for, in the business and professional setting, you will not have
Now on MobiKwik app, you can actually have digital cash. The motto for CBDC is not cash less, it is less cash.
Our focus is, given that we have such a large user base and also small merchant base, we first connect with them over daily life payments. Now after that, after looking at their KYC, their profile data, etc., we are trying to now diversify in terms of giving them access to the right investment product.
Is that a space that you're going to look at?
Now EA is becoming cheaper and cheaper. For sure it's a space that we are definitely looking at. We didn't sell a single share in the IPO. Neither did any one of our shareholders. That tells you about what they think about the future of Mobica.
Welcome back to Closing Bell. Let's get you some opinion then. CNBC-TV18 Shilpa Ranipeta spoke to Suresh Narayan, the chairman and managing director of Nestle, and asked him about the demand in urban consumption and any signs of pickup and the outlook for the next fiscal. Let's hear out what he had to say.
I don't, as a company, give any forecasts on what we will do. I can only say that I think volume growth has started to happen, which is critical for the consumer goods space. Whatever value we report is based on, pivoted on volumes. That has started to happen. Is this a secular trend? I think we'll have to wait for a while, but it's at least positive signs have started to come.
Okay, so that is some more commentary that's coming through. Let's go back to Anand Tandon. Anand, now I don't know, this whole idea of looking for something which is a bit of a safe haven. Clearly, IT stocks are not finding that favor today. Would you at all look at FMCG because at least there are cash balances and maybe on the hope that rural recovery will happen, so volumes will look better?
Well, if rural recovery happens, there is a possibility, but don't forget that they are still expensive even after the fall project, and an earnings growth which is likely to be very anemic and remain in the few percentage points. That said, your own channel was broadcasting a while back, a couple of days back, that the likelihood of a poorer outcome in terms of crops for the next season is very high. And if that turns out to be true, then that becomes more hope than reality. So for now, I would not bet too heavily in terms of where rural demand can go. But no doubt that is one of the aspects where the likelihood is not a low probability event.
Okay. All right. Any word, Anand, on some of these metal stocks? Last week they had a good run. Today they've all come in for profit taking. You like anything there, or you would avoid it?
Well, there isn't much in metals that you can look at. I mean, steel, we are basically assuming that there is anti-dumping duty that will keep going up. And if that happens, obviously you can offer protection to the domestic tariffs, but domestic market. But really, that just closes the market even more. Aluminum, if you are looking at it, then, well, there is some chance that it may do a little better. But if the global economy was to slow down, that too becomes a bit of a mirage. You have a company which is going through a corporate action where they're going to split up into multiple smaller companies. That could give you some value because of the simple reason that, typically each part trades eventually at more than the sum of all of them. So smaller companies, at least with each a little more focus in each area, it is likely that they will do a little better. But corporate governance issues continue to bog that group. So overall, I don't think that you have too much that you can look at in India for metals.
Okay, so not much to do on the metal side of the market as well. Anand, just give us a minute or so because we are now running into market close. So let's just close this out. What has been a really, really weak session, for the past couple of days, Nigel. In fact, I was just, thinking this, looking at the charts. We have been trading in that huge big candle day, which is the result day when the election results came out. From the high to the low, there was that massive 1,000-point swing, and we've not been able to get out of it, at all. And the market is at those low levels. We're talking about, late May to early June kind of levels for this market in this whole correction. Anyway, 250 points gone today on the Nifty. So what were the major culprits? IT, like we've been telling you, plenty of weakness. Wipro 3.5% down, HCL Tech 3.5%, TCS 3%, Infosys 3%. These are big stocks which have come in for heavy-duty selling pressure. Not a great day for Bharti Airtel. Metals, like Nigel has been saying, extremely weak. Tata Steel, Hindalco, even beyond the Nifty, all metal stocks were, in for a lot of profit taking today. And then the big boys couldn't do much. L&T, Reliance, SBI, ICICI Bank, not much happening on this side of the screen. The positive end of the market coming up with some names on the consumption side, whether you count in auto as maybe consumption as well. So M&M, Hero, Aisha, some buying over